So you were pre-approved, but you still got a loan denial. It happens way more than you think. In fact, 1 of 9 loan applications fall apart after pre-approval, and most buyers never see it coming. The scary part, most of these denials were preventable if only someone had done the real work up front. In this video, I'm going to walk you through the 6 biggest reasons loans get denied after a pre-approval and how to make sure this doesn't happen to you. So I'm Eric Hamilton. I'm a top mortgage lender in the country with over 20 years experience helping thousands of families build wealth through real estate. I'm not here to help you just get a loan. I want to help you close confidently without last minute drama. If you're buying a home this year, you need to understand what really causes loan denials after a pre-approval was issued and how to bulletproof your file before you ever make an offer. So let's dive in. So what does a pre-approval actually mean? And I think there's always some confusion around this. Pre-approval is not a guarantee. It's only as good as the information that you provide the lender. So it's very, very important to be upfront and honest with every part of the loan application, especially the pre-approval process. So a lot of times a pre-approval may even be issued without the documentation. It's consumer information that was put into an application. If your lender gives you a pre-approval in under an hour without reviewing pay stubs, bank statements, and taxes, that is a huge red flag that you want to be aware of. Think of a pre-approval like a snapshot in time. The real test comes during underwriting. When an underwriter reviews the paperwork that you may say, I make this much per month, but how an underwriter reviews it may be very different. That's where things can fall apart if we're not starting from a very solid ground up front. So, let's break down the 6 most common and avoidable reasons loans will fall apart after pre-approval. I sat down with my team and I went through, and this is what we came up for the top 6 reasons that we see loan denials recently. So number 1, and I can't stress this enough, is bad or experienced lenders. So let's call it out as straightforward as we can. Many denials happen because the lender did not do the work up front. But I'm going to take it a step further. Many loans are denied because the lender just was inexperienced and did not know how to calculate income, didn't know how to look at self-employed income. Sometimes it's providing too much information. Sometimes the more information you provide, the more questions it may result in, and maybe a different outcome than what you were expecting. I've seen buyers denied by other lenders only to come to me and we get the loan approved, and it's a lot easier than what we expected. This is not, the consumer's fault. This is just inexperience and something that where we always say, your outcome is not always going to be the same. And why assembling your team in my previous videos and other videos, and I'll link those in the comments, picking your lender is really, really important. If the lender isn't doing, a full document review up front, running automated underwriting, preparing your file, like it's already under contract, you're already at risk working with this lender. Not every outcome is going to be the same. With experience, you're going to have different solutions and outcomes. So very important to pick your team wisely. Number 2, job or income changes. So are you changing a job? Okay. Are you going to be switching to commission or self-employment? We see this a lot. Someone goes from W-2 to 1099. We go, I'm going to more commission income. I'm going to take a new job, but the first 6 months is only a guarantee, and then after that, it's not guaranteed. Any job change needs to be reviewed with a lender. Now, in the world we live in, 10, 15 years ago, people would work at a job for a lot longer. Nowadays, staying at a job 2, 3 years is pretty common. We don't see a lot of people with long tenures at a job. So changing jobs in itself is not an issue. It's the income and how you're paid typically becomes an issue. Even, getting a raise or a promotion, if it changes how you're paid, could affect how we get that loan closed and could affect your income. So again, Freddie Mac just came out with a study, and income issues are the top reasons that they see for loan denial. So how you're paid, if you're paid hourly, but you work 20 hours one week, 30 hours the next, 40 the next, and then you're trying to use 40 hours, but if you're not working 40 hours, that could cause an issue. Always consult with a lender before making any employment changes or moves during a process, but I will take it a step further. I work with buyers 6 months out, 12 months out, a year out. We go through these changes all the time. They'll call me, hey, we're thinking about listing the house. I'm getting ready to do this. Always communicate any and all changes on your job. Very, very important. Now, with that, there's a lot of things we can troubleshoot for if we know up front. The more information I have, the more I can provide to you, and the better experience I can provide you. Taking on new debt. This is a common one. As much as it's in every tutorial not to do, we still see people buying new cars, getting credit cards for furniture. The other big one that we see all the time is co-signing for a friend or a family member. If you are going to be co-signing for a family member for a car or anything, mom and dad, sister, brother, make sure you understand the impact of what that looks like and how it could affect your purchase down the line. We have people, as a non-occupying co-borrower for another family member's purchase of a home, and then all of a sudden that's impacting them. Your debt to income ratio is extremely important, okay? And, any changes to that, okay, could impact your approval outside of that. So it's very, very important. We see a lot of people where they'll have a pre-approval for 6 to 8 months, and they assume that if they move forward, this new credit card or this new car isn't going to come up. It's going to come up. Another study shows that 30% of all buyers, take on new credit during the mortgage process. That is not good. We have to be very, very mindful of that and how it can impact your purchase. The golden rule always is no new debt, no new credit pulls. Make sure you prevent any and all purchases until after your closing. It's the easiest way to avoid any issues later. Sometimes buyers will reach out to me, and I love when they do, and they say, Eric, I'm thinking about doing this. Can I do this? Sometimes we'll review it and say, you know what? It works. It's not an issue. But typically, I always advise them, if you can wait, it's always best to wait. I've had it where people will go get a car, and the dealer will pull their credit 9 times, okay? And it brings down their score. Those are the things that you have to try to avoid when searching and buying a home. Number 4 issue that we see is, and again, happens a lot right now, is unverified or large deposits that they need to make a purchase, okay? So money showing up in your account without explanation is a major red flag. The one thing I always say, it's not even necessarily a lending guideline as it is, government guideline for FBI and money laundering. We are required to source and verify all income, but all deposits going into your account for a home purchase. So we're required to document every large deposit, okay? This is for anti-fraud and anti-money laundering regulations. Now, keep in mind, we just need a paper trail. As long as we have a paper trail, that's fine. So if it's coming from here, we have people taking loans and they think, oh, well, they're not going to find it out. I'm just going to deposit in my account. Very bad mistake. The more you communicate and talk with your lender and this is where doing all the work up front would vet this. So what happens is they have a lender who doesn't verify funds at pre-approval, okay? Whereas in our process, we're going to be going through all that. Where's your funds coming from? Okay, I don't see this in your account. Where is this? And we talk through that, and this stuff gets vetted before they ever make an offer. Where most lenders, will say, oh, we'll figure it out later. That's where this becomes. And this is why it's a red flag, and why, if a lender's not doing that up front, it can lead to a loan denial. So whether it's a gift, cash reimbursement, we get people that have cash at home, okay? It needs to be sourced properly. If we can't source it, we can't use it. It's as simple as that. This is not a lender-specific guideline. This is an industry guideline that you have to follow. The number 5 reason is incomplete or outdated documentation. So, they give a pay stub to a lender 6 months ago, okay? But then all of a sudden, that expires 30 days later, okay, when they provide it. But then all of a sudden, their income changes. They're not working as much overtime. It's in the wintertime, and they're more seasonal worker, okay? Income becomes an issue. So always be updating your paperwork and work with a lender who's asking you to do this. If you're house hunting for months, don't forget to refresh your paperwork, okay? Your paperwork becomes stale typically after 30 to 45 days. Many buyers think that, hey, I got this pre-approval, I don't need to update anything. My lender's not going to check anymore. And that leads to denials and avoidable issues later on. We update every single client regularly and double check everything before you go under contract. We do this for two reasons. Number one, we want to avoid issues. That's really important. But number two, when we make that offer, we want to let the listing agent know that we've updated all this. All these things in here, if you get them done, that's going to make you a stronger offer and a stronger buyer to a potential seller. Okay, that we've done all this work, we've verified everything. The last thing a seller wants is a loan denied, 30 days after closing because we didn't do the work up front. Okay, and number six, okay, and this is kind of my question that I ask everyone when they come to me and they have a bad experience, a lender. The number six issue that we see is just very weak pre-approvals. Okay, this is probably the biggest red flag that you need to be aware of. Pre-approvals and under an hour, okay? Nothing wrong with it, okay? But if a lender gave you a pre-approval in 30 to 60 minutes based on only a credit pull and some verbal answers, it's a huge red flag if they did not walk you through the provisions of that approval and what's required to verify that that pre-approval is valid. A true approval means reviewing documents, calculating debt to income, running it through an automated underwriting, and I will take it a step further. Okay, we do commitment letters on all of our buyers. Is it a lot of work? Absolutely. I have 4 dedicated people on my team that rotate to manage my pre-approvals up front. It is a ton of extra work up front, especially when pull-through is as low as it is right now with lower inventory, but we do it because we want to provide a good experience, and I don't want to have any situation for my buyer where we're going to have an issue where we can't close on a loan, okay? Anything that's done fast is only going to create more friction later, okay? What we offer is a fully underwritten approval that has a to be determined property address, meaning your loan is 90% done before you ever make an offer, okay? That is peace of mind and negotiation power. Think of the mortgage process this way. We used to do 20% up front and 80% after going under contract. Now we do 80% up front and 20% after we go under contract. That is going to help you win and provide a much better experience and avoid denials. So, the last thing I want to talk about is that we've gone through these 6, denial reasons, but I want to kind of talk through the emotional toll of a loan denial because I think this gets not enough attention, okay? And it affects families, it affects their ability to find another home, and a lot of times it prevents people from trying again because they had a bad experience. And maybe it's one of those situations a lot of times where they can buy, they just went to the wrong lender, okay? And if you're under contract and your moving plans are set and your loan gets denied, the emotional toll of that is significant. So, here's how to protect your peace of mind more than anything is do all the heavy lifting up front. That is the goal. And if your lender is not willing to do that, then find someone who is. If your lender isn't asking for pay stubs, W-2s, tax returns, bank statements, and going through a full commitment letter, I would choose another lender. Ask if they're going to submit that to their underwriter before you go under contract. Treat this like an audit, okay? Not a handshake, an hour later, get a pre-approval and run out. Don't fall in love with the house, okay, until your loan is locked down and ready to move forward, okay? So let's talk through some best practices that I'll leave you with to make sure you have a smooth process, okay? Here's what top clients that we work with do and what we coach every buyer every single time I go through a consultation and my team goes through, okay? Number 1 is no financial moves, okay? So don't do anything while you're buying. Number 2 is send in all your documents right away. Respond to document requests within 24 hours. I joke around in the office a lot. You're buying a house. You're not buying a washer and dryer from Home Depot. Take the time to enter this process and provide the information that's needed in a timely manner. Transparent communication is number 3. Tell us everything. Gifts, job changes, transfers, anything that you think might be an issue, let us know. Number 4, use a lender that underwrites up front. That is our number 1 thing that makes us different, that gets offers accepted and makes for a better experience. Number 5 is choose a lender who educates, not just approves your loan. We want to build wealth, not just loans. Okay, so let's give a quick summary and action plan. Pre-approvals are only as strong as the process behind them. Take your time to do the work up front. The biggest risk in the end is emotional. Falling in love with a home before you're approved and going through a bad experience. The other thing to take away in action plan is lender shortcuts will lead to buyer heartbreak. Okay? Make sure you strategize up front and have a good process and ready to go. So your 3-step game plan after watching this video: demand a fully documented underwritten approval, lock down your finances during the process, and work with a lender who teaches you and protects your approval along the way. If you found this helpful, hit the subscribe button, and we will have a weekly mortgage education video that we release designed to help you build wealth and not just close loans. If you have any questions, drop them in the comments. I will answer them personally. And are you thinking about buying or refinancing? Schedule a strategy session in the link below, and let's do the real work before you fall in love with a house. My team is with you before, during, and after closing, because it's not just about the loan, it's about your future. So check out our next video that drops, and I look forward to talking to you soon. And if you have any questions, just let us know.